Good afternoon, everyone. Welcome back. So, again, as it is Tuesday, so this is not a review video. This is a follow up on the setups we discussed yesterday. Okay, we'll quickly go over them one by one, and that will be all for today. Okay, so let's start. First thing I'm going to start off with is a good news. So, the good news is AUD USD hit target. So, remember, we said that a break below and a close, right? The third candle is just a bonus. A break and a close would actually prompt us to sell. So I placed an order early morning because last night the break and close did not happen. So I placed a order early morning, got filled, and hit target immediately. Okay, so I'll show you that trade. There it is, right? AUD USD, small lot size, not too much, just about 3 lots. $8 worth of commission, 939 USD worth of profit. Okay, you can see the trade there, not here, here. Okay, wait, let me turn that on. Trade history, yeah, there it is. So there was the fill, very cheesy fill, and close. Now it's gone quite the distance after our close, but that doesn't really matter to us, right? It almost hit the target. It hit the pink, it hit the 1.2x extension, and that's it. Moving on to NZD USD, that never really got filled, but since it's broken and closed below that level, we'll keep the orders. Okay, I'll most likely be taking out most of my orders. Uh, yeah, I'll most likely be taking out most of my orders today because uh, we'll come back to CAD later on. We have federal funds rate tomorrow. It's late at night, but today night, I think today after New York Open, anything can happen, and I do not really want to get into that anything because that can then drag us all the way to the federal funds rate, and then who knows what can happen during the federal funds rate. So yeah, the NZD order will probably get cancelled, but right now it's open because we have a clean break and close below the 1.2x extension. So we know that once 1.2 is breached, next target is 1.5, which makes quite the sense because that is also a sweep of the last month's low. Okay, same thing goes for euro, exact same trade, exact same setup. So in case of a euro, I can probably close the order now, or cut the order, because that never really got filled. So our trigger was what? Clean break and hold of the last week's low. Okay, happened, went to target, right? No pullback, and that's fine. Things don't go accordingly most of the time in the markets. Odd was a brilliant trade. Dollar, as we said, has expanded. So look at that. Open of the week, blip above the last week's high, breaks down, right? Then break and a close above, confirming that this was not a bait, rather this was the bait, and the market went up. By the way, if you remember, we discussed this thing, right? So we discussed that. Look at that. So we expected either this low to hold or this low to get taken. Any one of the two would have been fine. And a clean break and hold above that level to target the 1.2x extension. All of that happened except for the pullback to go higher. So again, that's one of the reasons why we couldn't get into the dollar trade. But apart from that, everything happened just as we planned. Okay. Only trade we got filled on was AUD. Risk was pretty low. Risk is pretty low this week due to all the events and also my past performance. So we're done pretty much with currencies. The one interesting thing I would like to look at is EG. So it looks like I am in an EG trade here, right? But I am not. Okay. So I have cancelled the order for the EG trade. I'll explain it to you why. Okay, first let's just hide this because this is now just a reference. So if you remember, we said that after this candle closed above the orange, we wanted another close above that. Didn't happen. Breaks down. Then we do get another close. Okay, then we do get another close. But in my opinion, this is not good enough to justify a long. Now, if it were normal uptrend conditions, yes, it was justifiable for a long, but right now, is it? In this current condition, it isn't. Let's have a look why. Okay. Again, I've explained this again and again that this is my range high. So any test is of this area is pretty much a test of the range high. So we know that the market likes to go from range high to the range low. Okay, so that is my range high and that is my range low. So from range high to range low, yes, it can always go for a break, but we are not the one to determine whether it's going to break or not. That's on the market to tell us whether it wants to break out or not. So since the close here or the price action here seemed very lackluster to me, so I would have wanted something like this, right? A strong break and close above, then sharp dip, and then we get bought up. So I accept that I accept that pullback, and then we go up. We cancelled that disorder when the market probably came in there, because then I looked at it and I said, okay, with the in context with the market condition, it doesn't really make sense. Okay. And so we now have come up with a fresher trigger. So in that fresher trigger, what we've said is that if that is the high that created that lower low, we need a clean break above that. Once we get a break above that, then the market doesn't have to close above that or has to close above that. Any break above that is a valid trigger. Then we buy a pullback into the weekly open to target the higher high. As simple as that. We don't complicate things over here. I am personally too dumb to trade with a complicated system, so I have come up with a very simple system for myself. Where are the minus pairs? There it is. Okay. EG. These are the new triggers for EG. Oops. New triggers. And yeah, that's it for the currencies. I don't think there's anything else to update. One place or two places that really need updating is Nasdaq and S&P. Okay. So yesterday I said that yes, the market has made a high, but it needs to clean break above that to confirm that, which it did. And we had one candle close above that as well. So we did what anybody would do. We placed our orders in there, right? Currently the market has come halfway and has started to bounce. If it bounces and goes away from here, I would say that's great, because then there's a high probability that during the news we get filled. Okay, we get filled into our buy order and that takes us high. Okay, so I would say it's a good thing if we get if the market now goes up. So where are the indices? I think I'm blind. Yeah, I am. What was that? S&P. A high from here is quite welcome. Okay. Moving on to Nasdaq. Nasdaq's quite strong. Okay. Nasdaq is quite strong. Again, my orders were there. I'll show you my orders on my terminal. You know, you need to put your money where your mouth is, or else. So there's the S&P trade order placed, and there's the Nas order placed. Okay. So high from here is quite welcome, but I would love to see the market do something like this and then go up. So still a valid point. Now, when you consider the context of this trade, I would say contextually this trade is not very strong, especially Nasdaq. And since we are at Nasdaq right now, let's have a look. So you can see that the market gets rejected quite nicely from the last month's high. Okay, and it has done the same thing here. So it is quite important for this market to go back up and close above the last month's high before it comes down to fill us. Okay, That is one condition I'm willing to impose, or rather, I would love to impose on this market, and then go to the target if it does so. So, Nasdaq additional, is that okay? Additional trigger, is that a correct spelling? Yes, it is. Yeah. So that I want that clean close about the last month's high, and then, well, more than happy to buy it. Right now the orders are still there because they are based on our older triggers. But once we go into New York today, all the triggers will get updated, and the assets that have not triggered very cleanly, their orders will be gone. So again, this NAS order could be gone if it doesn't trigger. S&P, I don't really want to impose anything on S&P because I really think that that was a low sweep, right? High right there, high right there. But if it goes up there, fine. If it directly filters, that's fine too. Can go down from here, can go up. I don't really care. I care. All I care is about the weekly open structure and what I see on the market on the H4. I honestly do not think that this is going to break down and go for a lower low. Well, I could be wrong, but it's still an uptrend, so why not bet on a long? Right? People love to be the contrarian. I personally have suffered a lot because of that. Trying to be the contrarian, trying to be that guy who fades the market all the time, thinks he knows what he's doing, has an edge. He thinks he has an edge, but ends up losing money all the time. So gold and silver, nothing on gold and silver. By the way, we had an order on oil. Again, oil has similar story to all the inside week currencies. Never really filled us and went up there. So maximum, what I would have done is, right, at the maximum what I would have done is I would have placed my order there. But even then it doesn't fill. Because uh, an order, buy order below weekly open was a mistake. Remember, we place buy orders and sell orders according to the market condition. This right there, right, got very trendy, right, got very trendy. That is definitely a solid uptrend. So if that's a solid uptrend, then your bid should not exist in there or there. It should exist at least into that weekly open. Problem with oil is that even if you place your bids there, it won't fill you. Even if that looks like a fill, it won't, because it carries some sort of a, I would say, slippage in there where the bid and ask price are quite different. So your order needed to be there, up there, in order to get filled on oil, at least on my broker, which I would not have placed anyway, because then look at what's that doing to our risk to reward ratio. It is turning a 1.2 hour trade, or rather a 2.8 hour trade, to a 1.6 hour trade. It's taking away 0.8 hour from our trade, which I would never give away. I would never give away that just for the sake of the trade being filled. So oil is gone now. The orders have been taken off. The orders were there and they are now been taken off because the market hit target first before filling us. So there goes oil. Indices are done. Okay. We've gone over indices. We've gone over currencies. Now the only thing that remains is crypto. So we are shorting crypto. Wow, surprise, surprise. One simple reason for the short is Ichimoku. So what I believe is that the market is headed towards its Kijunsen. And this low, when it gets taken, might trigger some sort of stops. Might trigger a lot of stops, and then the market could deviate back to the upside. So that is the plan for Ethereum and BTC short. So I'll show you BTC in a minute. So that is, I would say that's crypto plan. Right. Crypto plan. Because Bitcoin, again, similar plan. Okay. Again, in this case, I don't want it to take it to the Kijun-sen because that really doesn't make any sense. Have a look at the. Now, this you should do this if you're on one settings. You should be trading on those settings. You shouldn't switch between settings just because it fits your narrative or it fits your bias. You keep on changing settings, you'll more than likely get burnt. But since we have a nice flat Kijun there, I would say Bitcoin's probably headed there in that 62,000 region. So you shouldn't do this, what I'm doing right now, but I'll do it anyways. I will do it anyways. There we go. Now, okay, wait. I think my internet's given up on me. No, it has not. Thank you. Now, that is the sort of context for the short, right? We are looking to take it to the Kijun-sen. Kijun is generally a magnet for price and tends to get hit. Sometimes it gets front run, but most of the time it does tend to get hit. Now, why? Why? Simple. Remember, weekly bias. Open of the week, high gets taken. Local low low, low high, proper low low. Any pullback that tells you that it's going to V bottom reverse is a short to target new lows. Simple. Plan, or rather, I will just say setup. So, again, similar thing we are doing with Ethereum. With Ethereum, we are expecting a drastic pullback, so we expect a complete reversal. Whoa, look at that. It's already hit target. Wow, GG. When I placed the order, the market was there, and then it's just gone down after that. So any pullback in there should sell off, but right now I'm too skeptical to place that trade. We'll just add an alert there. If the market crosses that low first, then we'll take off the order. So your triggers are there. If the market takes out that low first, take off the order. If it doesn't, keep it. Who knows? With BTC, again, if the market reaches the monthly open first, then the orders would be taken off. If it doesn't, if it chops in there, then I'll keep the orders. Okay. So crypto done, currency is done, and well, everything's done. Right? Everything's done. Looks like EG might give us a trigger. If it does, we'll be more than happy to take it. So yeah, that's it for the update from yesterday. I think I'll now see you after FOMC or after federal funds rate. Best of luck for that event. Bye.